while. This product, relatively new product on SGX called Daily Leverage Certificates. All right. So this, in short, is DLC. We call it DLCs. We have launched and listed this new instrument product class about 5 years ago on SGX in 2017. So these daily leverage certificates we'll go through today, what this DLC is about, as well as introducing what we have just newly launched on the SGX. So that will be the 7 times Seng TECH DLC. So all right, so today's session we'll go through what are the latest developments on the DLCs, but we also have a bit of a 101 on the DLCs so as to guide those who are not too familiar with what the DLCs are, what they can do. So we run through the 101 on that. How can investors trade the DLCs? Especially also how can investors trade the DLCs on Tiger Brokers? All right. So for today's session, it's going to be quite a short one, but I'll try to cover as much as possible. All right. So I mentioned that the DLCs, daily leverage certificates, are on SGX. All right. So this is an instrument that is listed on SGX securities market. All right, which means that you can gain access to these DLCs through your regular stock brokerage account. You can gain access to it on Tiger Brokers platform. All right, so you can trade, buy and sell them just like you would buy and sell your DBS shares or your UOB shares, etc. So it is on the SGX securities market. All right, but the benefit of these DLCs is really that it can provide you exposure to more than just the Singapore indices or Singapore stocks. It can offer you exposure to Hong Kong stocks and Hong Kong indices, and also our newly launched US indices DLCs as well. All right, so you can gain exposure to the US and the Hong Kong markets using the DLCs that are listed on SGX securities market. So that's what I'm excited to share with you about. You can gain regional exposure very much here on the SGX securities market. All right, so I think without further ado, let me go into what the DLCs are. All right, so the DLC stands for Daily Leverage Certificate. All right, so a common misconception that people might have is, daily. All right, so daily doesn't mean that it can only be traded for intraday or for one day only. Well, that's a common misconception. You can trade the DLCs for more than a day. All right, so people usually trade it for a few days or a few weeks, or a month, etc. But definitely, this is not a buy and hold product. This is a short-term trading instrument. All right, but then this daily leverage, this daily comes in the form of the leverage that you get every day. Every day you get that same fixed leverage, 2 times, 5 times, or 7 times leverage. That's why there is the word daily over there. All right, so you get a fixed daily leverage from this on the underlying asset on a close-to-close basis every day for using these DLCs. All right, so you get a fixed daily leverage, and there are 2 types of DLCs, right? There are long DLC and a short DLC, right? Which means that you can trade both sides of the market. You can either capitalize on opportunities in a bullish market, or you can also trade these DLCs in a bearish market. All right, you can capture both the upside and the downside of any stocks or indices. All right, so you get a leverage of 2 times, 5 times, or 7 times daily leverage, and these DLCs are linked to an underlying asset, whether it's an underlying stock index, whether it's your STI or your Hang Seng index, or a single stock. It can be your DBS shares, or it can even be Tencent stock itself. All right, so these DLCs are always linked to an underlying asset to give you that 2 times, 5 times, or 7 times leverage on the underlying asset's daily performance. All right. So as I mentioned, that these DLCs are listed on SGX securities market. You can trade it like a stock. All right. So you buy and sell this very much the same way that you would buy your DBS shares or your UOB shares. So you can find it on the SGX securities market. You can trade your regular stock brokerage account. This is not you don't have to open a separate account to trade these DLCs. All right. And these DLCs are issued and launched by and issued by SGX, by Societe Generale. All right, so we are the issuer for these DLCs, and we are also the designated market maker for these DLCs. All right, so you don't have to worry about not being able to buy and sell these DLCs during the day, during the trading day, because Societe Generale, we are obligated by the exchange to provide continuous liquidity throughout the trading day for investors to buy and sell these DLCs. All right. So another misconception is sometimes we have over 300 DLCs that are listed on SGX market. Not all of them are actively traded. All right. So there are some that are not as actively traded, and you might even see that there's no turnover on the DLC for that trading day. All right. But it doesn't mean that you can't buy and sell that DLCs. Okay, because Societe Generale, we will be providing that bid and offer volumes, the bid and ask volumes for investors to buy and sell throughout the trading day. Okay, we provide the prices as well as the volume for investors to buy and sell the DLCs, even though there is no traded value or traded volumes on these DLCs for that day. All right, so that's another misconception that investors should not worry about. You will have that liquidity to buy and sell the DLCs throughout the trading day. All right, so that's a bit of a nutshell of what the DLCs are. They do give you that fixed daily leverage. I think the payoff is very much similar to your leverage and inverse ETFs. For those of you who are familiar with, say, the TQQQ or the SQQQ ETFs in the US that you might trade it, all these DLCs provide the exact same kind of payoff, right? That fixed daily leverage, whether is it 2 times, 5 times, or 7 times leverage on the underlying index or single stock. Okay. So these DLCs, we've been around for quite a while. Although it's still a relatively new product on the SGX securities market, we have expanded quite a lot over the years. It was first launched in 2017, just starting off with index DLCs, 3 times and 5 times index DLCs on the MSCI Singapore Index as well as the Hang Seng Index. But we've expanded year on year ever since, and right now we've grown from 10 DLCs all the way up to now over 300 DLCs that are listed on SGX securities market. All right, and just last year we just made a very interesting launch. We launched the 5 times and 7 times DLCs on the US indices, S&P 500 index, Nasdaq 100 index, and the Dow Jones index. All right, this allows investors to gain exposure to the US markets during Asian hours and within the comfort of trading them here on SGX securities market. All right, so we do have this over 300 DLCs listed on SGX right now, and one pillar of them is the Hong Kong shelf. So we do have the Hang Seng Index, Hang Seng China Enterprise Index, and the Hang Seng Tech Index as one of the underlyings for the DLCs. We have 5 times and 7 times leverage on these indices. We have over 40 stocks. You can name it. Those are the Hang Seng Index constituent stocks. Your Tencent, Alibaba, Meituan. So your China tech giants, we covered it. As well as we do have a lot of other, perhaps a bit more old economy stocks, like your China Merchant Bank or your China Construction Bank. So we do have a wide range of Hong Kong underlying DLCs, which allows investors to gain exposure to the Hong Kong market here on SGX securities market. All right. And also on the Singapore shelf, we do have the indices, your STI index, as well as your MSCI Singapore index. And we do have most of the blue chip constituent stocks, your DBS, your Singapore banks are there, definitely. You also have your Singtel, Wilmar, CapitaLand, etc. As underlying. So we do have 5 times DLCs on them. And of course, the newly launched US index DLCs, S&P 500, Nasdaq, and Dow Jones index with 5 times and 7 times leverage on them. All right. So I mentioned that the US index DLCs were something that we launched last year, and we believe that it has a huge potential. I mean, for those of you who trade the TQQQ or the SQQQ in the US market, these guys trade a lot, large volumes every day, and investors really want to gain leverage exposure to the US indices in the US market over there. Whereas, so for these DLCs that we have here on the SGX securities market, over the Nasdaq, the Dow Jones index, as well as the S&P 500 index, we have up to 7 times leverage for both long and short directions. All right, so this is very much similar in terms of its payoff to the TQQQ or the SQQQ. Just that we offer 5 times or 7 times leverage, whereas the leverage and inverse ETFs in the US only offer up to 3 times leverage. Right. So this one's the only catch is that you can only trade it during the SGX market hours. All right, from 9 a.m. to 5 p.m. You're not able to manage your positions during the US market hours because that's when the SGX market is closed. All right, so you do, for those who are perhaps maybe who are intraday traders or who are scalpers in a sense, this instrument might not be so relevant to you in that case, right? You might want to trade the US listed leverage and inverse ETF instead. But for those of you who are perhaps a bit more of a position trader or swing trader, well, and you want higher leverage, 5 times or 7 times leverage, then this instrument could be for you as well. Especially also if you want to trade the US markets within the comfort of on the SGX market, where you're more comfortable with and you're more familiar with, then you can use these instruments on the SGX market to trade the US equity indices. And especially if you want to hold it for a few days or a few weeks, you're not going to be waking up at the middle of the night to manage your positions. Then you're comfortable with that, then I think this US index DLCs are very suitable for you as well. All right, so you can consider these US index DLCs that are listed and traded on the SGX securities market issued by Societe Generale. All right, and I think the highlight of today, I guess, is the Hang Seng Tech Index DLC. All right, so this one is something that we just recently expanded. We expanded the shelf to include 7 times DLC. Recently, we only had 5 times leverage on the Hang Seng Tech DLCs, but we have since expanded to 7 times leverage. This is something that we see as a response to market demand. Ever since China reopened its economy in October last year, and I think a lot of the China tech giants are starting to also review their businesses, to split up their businesses. Alibaba was one of the latest ones to say they're going to split up their business into 6 or 7 different units. Well, this kind of news really drives the market and creates the kind of volatility. And I think we did see that Seng TECH DLCs, the 5 times DLCs, was the most actively traded index DLCs in the first quarter of this year. All right, so Seng TECH has definitely been in the focus in the first quarter of this year. And this demand for 7 times leverage is a response to that volatility in the market, and people want higher leverage 7 times on the Seng TECH index. So this Seng TECH DLCs, 7 times long and short, is definitely going to be very exciting. And you can find this on the SGX securities market together with all the rest of our DLCs. All right. So the Seng TECH definitely constitutes like the top 5 constituents is your Tencent, Alibaba, Xiaomi, Meituan, Kuaishou. So if you are very interested in the China tech story or the China tech companies, then well, this Seng TECH index is definitely something to look out for. And also for those who want to trade the index rather than the single stocks, a more broad-based approach to the tech sector, you can use this 7 times DLCs on the Hang Seng index. And I think the true benefit really is that you can go long and short on this Seng TECH index. Otherwise, you can trade the market, especially given so that the Hong Kong market is not really in one direction up. There is quite a large swings in the market. Well, this long and short instrument on the DLCs is definitely something that will become useful for you to be able to navigate the volatility that we are seeing in the Hong Kong stock market. Okay. So this DLCs on the Seng TECH, the 7 times, is the same as all other DLCs, giving you that 7 times performance on a close-to-close basis of the daily performance of the Seng TECH index. All right, let's go a bit into the bit of basics of the DLCs. How does it work, etc. So that for those of you who are new who are watching this, who are new, can understand a bit more about how the DLCs work. It's really quite simple in that sense. The leverage strategy is really daily percentage performance of the underlying asset times by the leverage factor will be equal to the daily percentage performance of the DLC. All right. So in this example over here, you can see that DBS was up by 2% versus the previous day close, rising to $30.60 from $30. So it's a 2% gain. So the 5 times long DLC will be up by times 5. So there'll be 2% times 5. That's 10% gain on the long DBS DLC. And conversely, on the 5 times short DBS DLC, it'll be down by 2% times 5, so that's minus 10%. All right, so that's because the DBS share has a rise. That's for the long DLC has also gained in value by 10%, whilst the short DLC has fallen in value by 10%. Conversely, right, if the DBS stock was instead down by 2% on day 2, right, it was down from 2% from $30, it's down 2%, then the 5 times short DBS DLC will be up by 10%, while the 5 times long DBS DLC will be down by 10%. All right. So that's how the DLCs work. Every day you get that 5 times performance of the percentage performance of the underlying stock or underlying index. All right. So you get it on a close-to-close basis every day. This 5 times performance for the 5 times single stock DLCs. All right. So this is an example of the DLC. For in this case the Meituan long DLC. This has a stock code of DAVW. So all the DLCs will come with a 4-character stock code. So this Meituan 5 times long DBS, 5 times long DLC DAVW has a stock code DAVW. So if you go into your Tiger Brokers platform and you search DAVW, you will be able to retrieve this Meituan 5 times long DLC. And in the name of the DLC, you can see over here Meituan will be at the front of the name, and that is the underlying asset. Okay, so the underlying asset is always at the front of the name, followed by the leverage factor, which is either 5 times or 7 times, and then followed by the direction of the DLC. So I mentioned there are 2 types of DLC, right? One is a long DLC, one is a short DLC. So over here, you can see in the name that this is a long DLC, and it's something that you should buy if you are bullish on the underlying stock. All right. And after the direction, the long, there is a 2-character code there, SG. All right. So SG stands for Societe Generale. We are the issuer of this DLC. All right, and then followed by the expiry date in the name, which is the year month date format. All right, so this DLC will expire in 24th October 2023. All right, so you can tell a lot from the name of the DLC. So do look out for the name as well to make sure that you choose the right DLC, whether it's a long DLC, you're looking for a short DLC, whether you're looking for a 5 times leverage or a 7 times leverage. and also most importantly, which underlying asset you're looking out for. All right. So this is the Meituan one. And I think the purpose of this slide is to show that, this is where the 5 times performance is. On this very volatile day, you can see that, Meituan was up by 8%, right? On 23rd March 2023. All right, so it's up by 8%. So it's a very volatile day, even for a Hong Kong stock market, for Meituan to be up by 8%. All right, it's 8%, and you can see that the DLC, which is priced around, you generally price around 20 cents to $2. This DLC is priced around 40 cents. All right, it's up by 40% from its previous day intrinsic close. All right, so it's up by 40% while the underlying stock is up by 8%. So that's where the 5 times performance comes in. All right, so this is to show you where the 5 times performance is. And this happens every day on a close-to-close basis for all the DLCs. All right. So this 5 times performance is based off the previous day close, right? So Meituan stock is up by 8% from the previous day close. And so the PAVW Meituan Long DLC is up by 40% from its previous day close. And its previous day close is published every day on the SocGen website, all right, in our DLC website. You can see over here beneath that gray arrow, I think we covered it a bit, so sorry for that. You can see that there's a last intrinsic close over there. So that's where we'll publish the intrinsic close of the DLC every day after 7 p.m. All right, so every evening we'll publish that intrinsic close over there for our DLCs. And then you can see that the next day, this 40% gain or this 30% gain, etc., whatever that the 5 times performance is based off this previous day last intrinsic close. All right, so it's quite important for you to know what this intrinsic close is. It is the daily mark-to-market value of the DLC, and it's used as a reference for the next day's 5 times performance. All right, so look out for it on our website, dlc.socgen.com. You'll be able to see that the intrinsic close is refreshed and re-updated every day in the evening for all our DLCs. All right, so conversely, I mentioned that the short DLC will be down when the underlying stock is up. So on this day, the same day, Meituan is up by 8%, while the Meituan stock, in Meituan DLC DZMW, the 5 times short DLC is down by around 40%. All right, so that's 5 times that of the underlying stocks movement. All right, so leverage, of course, is a double-edged sword. So you can get 40% gain in a day using the DLCs if you get the direction correct. But similarly, you will also suffer losses of similar magnitude, minus 40%, if you don't get the direction correct. So when you're trading these leverage instruments, I think it's just important to make sure that you understand your exposure and position size properly, as well as exercise, discipline in terms of a cut loss plan or cut loss measures, so that you can, make sure that you have enough discipline and that you're in for the long haul and not just a one-time thing. All right. So always trade with caution when you're using leverage. So that's one thing that we just generally advise investors, that when using the DLCs, it's a leverage instrument. It's a short-term trading instrument. So actively monitor your DLCs as well as be careful when you're using leverage. All right. Okay, so why would investors usually trade the DLCs, right? Number one is leverage. All right, so those who are coming to trade the DLCs who are generally looking for leverage, and we offer up to 7 times leverage, so that is quite exciting. For those of you who trade the Singapore stocks, you know that the DBS stocks, etc., or the Singapore stocks might not move that much, within a trading day. For DBS to move even 1% is quite a relatively volatile day already. So some people might say that the Singapore market is quite boring in that sense, although it can be seen also as resilient. But for those of you who are looking at a bit more volatility in the Singapore market, can consider the DLCs, right? So they can consider using the leverage. So if the EBS is up by 1% today, the DBS DLC will be up by 5%. And that 5% can be quite interesting, especially for those active traders out there who want to do an intraday trade or even a one-day trade. This 5% could be quite interesting. All right. But also, I think the most important thing that we have seen is that people have generally liked to use the DLCs to trade the Hong Kong stock market. That's for a multitude of reasons. All right. So trading the Hong Kong stock market might not be that easy for some, and also might be quite expensive for some, especially there are fees involved, exchange fees involved, which are higher. But also, there's a very high minimum investment sum when trading the Hong Kong stocks. For those of you who trade the BYD stock, the electric vehicle company one, I think some of you might know that it requires a minimum investment sum of 15 to 20k Sing dollars to buy the BYD stock because of the minimum investment lot size. So that can be quite daunting for investors who are actually looking for a smaller position, or for investors who are actually looking to scale in or to average in their position over time instead of just a one-time lump, put in 15 to 20k. That can be quite a lot for some investors. So using the DLCs, you can gain exposure to BYD stock using the BYD DLC. And the minimum lot size for the DLCs is 100 ball lot units, same as all the Singapore stocks. And they're generally priced around 20 cents to $2. So generally, yes, you can gain exposure to the BYD stocks for as little as a few $100 or even less than $100. But of course, you must take into account your broker commission. But the point is, you can get exposure to the BYD stocks using a smaller investment sum, or you can even scale in your positions. You can put in $1,000 for 5 days consecutively to get that $5,000 exposure. And that way you can actually scale in your position rather than putting a one lump sum into the BYD stock. All right, so that's what investors love about the DLCs. Also Tencent, Tencent is minimum investment sum is about 8 to 10K. So I mean, for those of you who might have 8 to 10K, I'm sure to buy the Tencent stock on Hong Kong Exchange. But you might want to actually position size. You might want to split it into 2 tranches, and so you can use the Tencent DLCs to split your investment into 2 tranches. This week you buy 4,000. Next week you buy another 4,000 in order to be able to gain exposure of a total of 8,000 to Tencent. All right. So you can't use the DLCs for smaller position sizes or even to scale in or average into your position, especially if you're looking for a short-term trading position. All right. If you're looking to only hold to gain exposure to Tencent for a few days, for a few weeks, then the DLC could be very ideal for you. But of course, if you're looking to buy and hold the Tencent, gain exposure to Tencent over the long run, like a 1 year or 2 year sort of a long-term investment portfolio, and you're not going to sell, you don't intend to sell it, etc., then definitely you should go and buy the stock itself. You shouldn't be buying the DLCs. The DLCs are for short-term trading. And I think in the next few slides, I'll show you guys what are the more popular ways that people have used to trade the DLCs, what kind of trading approach they have taken when it comes to trading the DLCs in the short term. All right. So DLCs, generally, there's 3 types of traders who trade the DLCs. I think one would be quite predominantly is day trading. Investors who use the DLCs for day trading, for intraday trading, meaning that you buy and sell the DLCs within the same trading day. All right. So if the kind of moves that you saw just now, Meituan was up by 8%, and the long Meituan DLC was up by 40%. That kind of gains and that kind of like amplitude of the DLCs, the range that it can give you, potential return it can give you, definitely do attract a lot of day traders, people who will come in the morning and then they want to expect to make about double-digit gains by the end of the day. All right, because they can capture on these volatile stocks on the Hong Kong stock market and then multiply that by 5 times leverage. All right. So there are quite a lot of day traders that trade the DLCs. There are also swing traders, position traders, people who are willing to hold the DLCs for a few days or even a few weeks, who want to capture a nice uptrend or a nice downtrend on the DLC, on the underlying stock, so as to be able to also make a more than that 5 times performance because of the compounding effect, which I'll touch on later as well. All right. So this swing trading is definitely another popular way that people trade the DLCs because DLCs work best in a nice trending market. And then you're able to get actually more than that leverage factor that you have on the DLC. So swing trading is another popular way that people use to trade the DLCs. And lastly, the hedging strategy, which is something that people are starting to learn more about, to get more used to, is to use the short DLCs to hedge your long-term investment portfolios. All right. So I think in this kind of volatile market that we've been in, where it's really quite large swings in the market, for those of you who want to be able to see an impending correction on the underlying stock or the underlying index, but you're holding on to those stocks or that ETF for the long term, right? You do not want to sell those because you believe in the long term, and that's part of your long term investment portfolio. But you do see an immediate or a near term correction coming, and you want to be able to hedge some of your long term investment portfolio, you can use the short DLC to make some of the gains when the underlying corrects and it falls as you predicted, to be able to offset some of the losses on your long-term investment portfolio. All right. So that is another way that people have starting to use a short DLC for hedging purposes. And it's something that investors in Singapore are starting to get more used to, how to short using the short DLCs. All right. So I've got some examples over here to show you guys. So a day trading, this is the Tencent short DLC DYXW. All right. So, if you think that the Tencent stock is going to fall in value today, all right, you can buy the Tencent short DLC DYXW at 9:30 in the morning when the Hong Kong market open. And that's when we start market making on the Hong Kong DLCs. All right. You can buy it then, and then you can sell it for a profit just before the market close at 4 p.m. for a 35% gain, because on this particular day, the Tencent stock fell by 7%. So when Tencent stock fall by 7%, the 5 times short DLC DYXW would rise by around 35% for you to make that gain. So you can buy in the morning and you can sell just before the market close to make that 35% gain. All right. Or conversely, of course, if you have managed to got the wrong direction wrong, and instead 7 times, the Tencent stock actually gained by 7% that day, well, then your 5 times short Tencent DLC will be down by 35%. Okay. All right. So in this case here, this is a swing trading example. All right. This is a DLC DPDW. This is the 5 times long Tencent DLC. All right. So on this particular day, on this period between 10 trading days between 11 January to 27 January, we saw that Tencent stock rose by 11% during these 10 trading days. And the 5 times long Tencent DLC DPW rose from $1 to $1.58. All right. So you can have this nice swing trade, and you can see that 58% gain over here is more than the 5 times performance, right? So 11% gain on Tencent is times by 5 is 55% gain. But if you hold a DLC for more than a day, you will have that compounding effect, and it can work very well for you in a strong trending market like this, where you can get more than the 5 times performance. Right? The extra 3% gain is due to the compounding effect. And that's why the DLCs work best in a nice trading market. If you can capture a nice trend in the market, the DLCs can really give you more than that leverage gain on the underlying performance. All right, so this swing trading is another very popular way because you can potentially make some huge gains if you manage to capture a nice trend in the market like this, where the Tencent rose by 11% over the 10 trading days. Of course, again, the losses are magnified on the 5 times short Tencent DLC as well during this period, because if you go get direction correct, then yes, you will be suffering losses of almost similar magnitude. All right, and the last example I mentioned, the hedging one, which people are getting more used to shorting, to using the short DLCs. So in this case here, you might have Tencent, Alibaba, tech giants, because you believe in the long-term story of these guys, these China tech giants, and you want to hold their stock for the long term. All right, so you bought their stocks long time ago and you want to hold it for the long term. You believe in the China growth story, but you do see that there's a lot of geopolitical headwinds coming, or a lot of company-specific bad news coming out of Tencent or Alibaba, for example. You can use the short DLCs of Tencent and Alibaba to hedge your position, but you can also use a broad-based index like the 5 times short Hang Seng Index to hedge your position. In this example over here, you can see between 16th September to 30th September 2022, last year, Tencent and Alibaba fell around 9% and 8% respectively during this short period of 11 trading days. If you had bought the 5 times short Hang Seng Index DLC, CZJW, you would have been able to gain 50% on the back of these underlying stocks falling 9 to 10%. All right. So if you bought it at 160, you will rise to $2.40, and then you will have made that 50% gain across these 11 trading days. All right. So you can use the broad-based index as well to hedge your portfolio. If you hold a lot of different Hong Kong Hang Seng Index constituent stocks, for example, you can use the broad-based index to also hedge your positions and to profit when the Hang Seng Index falls in line with all the constituent stocks, to be able to make some gains to offset your long-term investment portfolio. All right. So hedging is something that is a bit more for the sophisticated investors, but I think this has become a bit more popular in the recent months and year, especially given that the market has not been very bullish lately. We have seen a lot of investors using learning to use the short DLCs to either profit from a correction in the market or a downtrend in the market, or to even to hedge their long-term investment portfolio. All right. So that's 3 examples of it: day trading, swing trading, as well as for hedging purposes, are some of the key reasons why key strategies that investors have been using the DLCs for. Okay. All right. So this is a very important feature on the DLCs, the compounding effect, which I would like to go through a bit more in depth in this today's presentation. So for anyone who trades the DLCs, you have to understand the compounding effect. And if you trade the TQQQ or the SQQQ, NASDAQ, ProShares Ultra, long and short, 3 times leverage NASDAQ ETFs in the US, they too have this compounding effect. All right, so you have to understand this compounding effect before you trade any of these DLTs or leverage and invest ETFs, because it can materially affect your performance on the instrument. All right, so the compounding effect is a double-edged sword as well. It can work for you or against you. It can work for you very well in a strong trading market, but it might not work so well for you in a volatile market. All right, so you have to be aware of that. So in this table on the left over here, you can see that the underlying is up by 1% on day 1, up by 2% on day 2, and up by another 2% on day 3. So overall, it's a gain of 5% gain, all right, across the 3 trading days. The DLC, it gives you that 5 times performance on the close-to-close basis every day, right? So you can see on day 1, it's up by 1%. So the underlying is up by 1%. So the DLC is up by 5%. On day 2, it's up by 10%. On day 3, it's up by another 10%. All right. So every day it gives you that 5 times performance. But over the 3 trading days, you can see that the overall gain on this DLC is 27%. So 5% times 5 is 25%, right? So where did the extra 2% come from? That is from the compounding effect. All right. So every day your gains and losses are locked in. So you can see over here on day 2, your 10% gain is based off a higher base of $2.63. Your day 3 gain of 10% is based off another higher base of $2.89. So your gains are compounded in that sense to give you that extra 2% gain on the DLC. All right. So there is that compounding gain. All right. So that's where in a strong trending market, the DLCs can work for you. But where it won't work as well for you is in a volatile or a sideways market. All right, that's where the compounding effect might not work so well for you. All right, so on the table on the right over here, you can see that the DLC the underlying is up by 2% on day 1. So the DLC is up by 10%. On day 2, the underlying drops by 4%, and so the DLC is down by minus 20%. And on day 3, the underlying is up by 7%, 7.3%, while the underlying is up by 37%. All right, so you can see the underlying is up over the 3 days by 5%. All right, but the DLC is only up by 20%. Okay, so 5% times 5 is 25%, but the DLC only is able to generate 20% gain. That's because of the compounding effect. All right, so every day your losses, as well as your gains, as well as your losses are locked in. You can see that on day 2, it fell to $2.20 because of the sharp drop in the underlying by minus 4%, so minus 20% on the DLC. And on day 3, it is up by 37%, it rebounded, but the 37% is based off a lower base of $2.20 because your losses are locked in. Therefore, the DLC can only give you a 20% gain over the 3 trading days, less than a 5 times performance. All right, so the 5 times performance, take note, just be careful and be aware of that. It's on a close-to-close basis of the underlying stock on a daily basis only, all right, on a close-to-close basis, right? If you hold a DLC for more than a day and over a few days or a few weeks, the compounding effect will kick in, like this, as illustrated in this table over here. All right, so you might, the amount of leverage performance that you will get will vary from the 5 times performance, depending on how the underlying moves. All right, so compounding effect is very important for everyone to understand. Compounding effect of the DLCs is a very important feature to the DLCs, which investors have to understand before trading the DLCs. And to take a mental note that, it can work very well for you in a strong trending market. But if you see a sideways market or a volatile market, then it might not work so well for you. And it's important to exercise, like I mentioned just now, trading discipline, to either manage your position or to cut loss if you do encounter a very sideways moving market or a volatile market. Okay? So this compounding effect, over here you can see some examples of the compounding effect. You can see that NASDAQ was up by 5% on across these 5 trading days, while the TQQW, the 7 times long NASDAQ DLC, was up by more than that 7 times performance, right? 5% times 7 is 35%. But over here you can see there's a plus 39% due to the compounding effect. All right, but in the sideways moving market, you can see that, over here, NASDAQ, between these 13 trading days, between 27th Feb to 20th March, NASDAQ was up by 4% overall, but the DLC is only up by 23%. So 4% times 7 is 28%, but this DLC is only up by 23%. All right, so the compounding effect really works for you in a more nice trending market where it's consecutive days of gains or losses. But it will not work so well for you in a volatile market or a sideways moving market like this. Okay? All right, so that's a very important feature. You can find more illustrations on our website, which I'll try to show you guys later. I think we should have some time to just run through the website a bit on the DLCs to show you guys our SocGen DLC website. All right. So some of you who are active traders out there, you might be wondering, okay, how does the DLCs vary or how are they different from other leverage products out there? Well, this table is a bit of a summary of how the DLCs are different from other leverage products out there. The DLCs, remember, there's exchange traded, is listed and traded on SGX securities market. All right, so it is different from your OTC products like your CFDs. CFDs, contract for differences, are OTC products. They're not traded on the exchange, they're traded over the counter. All right, and also these are margin products. The DLTs are not margin products. All right, you don't have to put in margin in order to gain the leverage. The leverage of the DLT is inbuilt into the leverage strategy or the formula of the product itself. Every day you get that 5 times leverage on a close-to-close basis. Whereas, on the margin type products like the CFD, you put in $1,000, then you can get up to that 5 times performance. All right, 5 times exposure on the underlying asset. All right, so being not a margin product, so given that the DLCs are not a margin product, it's a securitized product, there is no risk of margin call in the sense that you'll not be asked to top up, even if the underlying moves adversely against you. All right, so 5 times DLC, for example, 5 times leverage DLC, if the underlying moves by 30%, right, against you, 30% times 5 is 150%. But for the DLC, the max you can lose is only 100%. All right, you'll never lose 150%. You can only lose whatever that you've invested. You put in $2,000 into the DLC, you buy $2,000 worth of DLCs. The max you can lose is that $2,000 only. You'll not be required to top up, or not required to put in more margin. All right. So whereas for the margin products on the over the counter space or CFDs, in order to maintain a position, you may be required to top up your margin in order to maintain your position if the underlying moves adversely against you. All right. And so there's a possibility that you could lose more than your initial capital on the margin product like CFDs, whereas DLTs, the max you can lose is your initial capital. All right. And versus other type of leverage products out there like options or warrants, which have that optionality impact, the DLCs are much more simple in terms of its performance. It's much more linear. All right, every day you get that 5 times performance or 7 times performance of the underlying asset's daily performance on a close-to-close basis every day. All right, all the way from listing all the way up to your expiry date. Whereas for option type products like the warrants or the options in the US, etc., they have the option impact where there is the time decay impact or the implied volatility impact, and this is something that is not you don't have to worry about the DLCs. There is no in the money, out of the money, at the money concept on the DLCs. All right, so all these are all option type product impact, and it could be quite hard for investors to understand. What does time decay and what does implied volatility have an impact on your pricing, as well as which option or which warrant should I choose, because there is different types of exercise price or at the money, in the money kind of concept. So for the DLCs, it's much more simpler to understand because you only get that 5 times performance on the close basis of the underlying asset daily performance. All right. So there's a bit of a difference between that. DLCs is neither a margin product nor is it a option type product. Okay, it is on its own, but I think that the closest similarity on the DLCs would be the leverage and inverse ETFs, as I mentioned. So for DLTs, the payoff is exactly the same as leverage and inverse ETFs out there. All right, you get that fixed daily leverage every day on a close-to-close basis, same as your TQQQ or your SQQQ. You get that fixed daily leverage every day, close-to-close. All right. So the only difference between DLTs and L&I, leverage and inverse ETFs, is that the L&I ETFs are an ETF structure, whereas the DLTs are in a certificate structure. And also on the L&I space, L&I ETF, the max leverage is often 2 times or 3 times, whereas the DLTs can go up to 5 times or 7 times. All right. So it probably definitely is a bit of a higher risk product than your leverage and inverse ETFs because of the higher leverage, but otherwise their payoff is exactly the same. All right, so I think I've come to the roughly the end of the theory part of this presentation. I hope that you've got a bit of a clearer understanding of what the DLTs can do and what they're for. All right, so I think let me switch my screen. I want to share our website, dlt.socgen.com, for you guys to be able to see, what resources we have on our DLC website, for you to find out more about the DLTs, learn more about the DLTs before you go and trade the DLCs. All right. Okay, let me share the screen. All right, so hope you are able to see. This is our website, dlc.socgen.com. This is where this is our SocGen DLC website, which I think has all the information that you will need to know about the DLCs. So you can come and visit here, dlc.socgen.com, to find out more about the DLCs. Over here you can see educational resources, but also you can see the full list of DLCs that we have over here under products, under search, All right, you can see that we have almost 300 DLCs listed over here. We have more coming up, so they'll be bringing over 300 DLCs. So we have a wide range of DLCs over here, as I mentioned, over Singapore underlyings, Hong Kong underlyings, and even the US indices, S&P 500, NASDAQ, or Dow Jones over here. All right. So we do have a long list of DLCs over here where investors can choose from. All right. So you can look for the full list of DLCs under products, search, and you're able to come here. All right. So let me now just give a very quick introduction as to how to select the right DLC for your target exposure. Otherwise, you can always view our videos on our education tab for more information about how to select the right DLCs, as well as other kind of videos that are a bit more practical in nature. All right. So for example, I am interested to go long or take a long position on Alibaba. I think Alibaba stock price might move, might rise. So let me look at the underlying. I'll look for Alibaba, right? All right, and then I will look for the long Alibaba DLC. All right, and all our single stock DLCs are all at 5 times leverage, so we do not have any variation yet. But if we do, you can always choose the leverage factor over here. But otherwise, all our single stock DLCs are at 5 times leverage only. Okay, and trust me, for Hong Kong stocks, 5 times leverage is enough. All right. So there are quite a few long Alibaba DLCs over here. So do not be daunted. Do not worry too much. Okay. So some investors might ask, so which Alibaba DLC should I choose? They are all Alibaba long DLCs. So what's the difference, and which one should I choose? Right. So if you're in doubt or if you're confused, simple answer is always look out for the red star indicator. All right. So this will tell you which is the most sensitive Alibaba long DLC to choose. All right. So this one is the most sensitive Alibaba long DLC that you should use, that you should trade to be able to gain a long exposure to Alibaba stock price movement. All right. So if in doubt, always look out for the red star indicator. The red star indicator will tell you which long Alibaba DLC to choose. And every single one of our stocks or indices, there'll be a red star indicator for the long side and the short side as well, for you to choose which is the most sensitive long DLC and the most sensitive short DLC. All right. And by sensitivity, I think the next question is people will ask, what do you mean by sensitivity, right? So, and what's the difference between this? All right. So all these Alibaba long DLCs, in principle, all of them will provide that 5 times leverage of the underlying stock's daily performance. All right. So if Alibaba is up by 1% today, all of these long Alibaba DLCs will give you that 5% 5% gain. All right. So don't worry too much about it. It will give you that 5% gain, but where they differ is in terms of its sensitivity, and that's due to its price. All right. So some you can see over here, some are priced at 19 cents, some at 37 cents, some are at 80 cents over here, and some are at super low price at 0.001. All right. So the different price ranges is a result of the underlying stock moves. So usually when we issue it at about $1, it could move low, it could fall all the way until 37 cents or 19 cents because of a downward move on the Alibaba stock. So that even though we issue it all at $1, or we issue them at the same price, they could move at different times. We issue it one at January, we issue one in February. It could move in terms of this price, and that's the result of having different DLCs at different price ranges. All right. So these are at different price ranges, but they still give you that 5% movement. But the sensitivity for each of these DLC is different. All right. So under the sensitivity column over here, the lower, the better. All right. So the lower, the better, meaning that, this is sensitivity means that this over here, you can see this DLC, DAYW, the most sensitive Alibaba long DLC, requires a 9 cents move on Alibaba stock price move to be able to generate one tick move on this Alibaba long DLC, DAYW. So if Alibaba moves by 9 cents on the stock price, this DLC will move by one minimum tick size. All right, one minimum bid size, which in this case here over here means it's 0.005, half a cent. All right. So if Alibaba moves by 9 cents, this DLC DAYW will move by half a cent. All right. That's because of the different price ranges and the minimum tick size. But otherwise, it is still the same 5% gain that you will see. So over here, for a given move on Alibaba long DLC, for it to move one tick, it only requires 9 cents move. Whereas for this low price DLC at 19 cents, it requires a 40 cents move on the Alibaba stock before this DLC can move by one tick. And one tick over here is the same, is 0.005. All right. So 0.005 divided by 0.875 is, of course, a smaller percentage move. and therefore it can move more number of ticks for a given move on Alibaba stocks price. But for this over here, DCUW, 0.005, half a cent divided by 19 cents is a much bigger percentage. Therefore, a larger move on Alibaba is required, 40 cents move is required, before this DLC DCW can move by one tick size of 0.005. Because all of them, in principle, are supposed to give you that 5% gain if Alibaba moves by 1% up, right? So different price ranges, 80 cents, 19 cents, will still give you that 5 times performance, but there are different sensitivity, and for those who are very active traders, who are maybe intraday scalpers, they want the largest range. For a given move on Alibaba stock price movement, I want this DLC to move 10 ticks or like 7 ticks so that I can be able to exit with ease or exit very fast. After it jumps 3 ticks, I want to exit already. For example, for those day traders, and not have to wait very long. So in this case here, DCUW, you have to wait for Alibaba to move by 40 cents before this DCUW can move by 1 tick. All right. So for those who are really scalpers or intraday traders, they don't want something that is so insensitive. They want a very highly sensitive DLC. And that's where it comes in the form of DAYW, where you can move 1 tick for every 9 cents jump on Alibaba stock price. All right. But for those who are position traders who are willing to hold the DLC for a few days or a few weeks, you might be okay with like a 19 cents DLC or 20 cents DLC because you're still going to get that 5 times performance, just that it takes a longer time for Alibaba to move the number of ticks for a given move on the underlying stock. All right. But of course, I think in doubt, always just look at the rate star indicator for the most sensitive DLCs to choose from. And I think if you go with rate star indicator, I think you should be safe in terms of choosing the best or the right DLC for your target exposure. All right. I think what to look out for is always, please do not think that cheaper is better. All right. For these 0.001 or very low price DLCs, please do not trade them. All right. So these are DLCs that have fallen in value by a lot, and they've become very low in price. So for a given for the Alibaba stock has to move by 33 Hong Kong dollars. All right. Before this DLC can move by 1 tick, because over here 1 tick 0.001 is equivalent to almost a 25% or 50% move on the DLC. All right. So the Alibaba has not had to move by quite a lot before this DLC DVIW can even move 1 tick. All right. So avoid low price DLCs. Always choose those that are a bit higher price, at least 20 cents and above. I would recommend for the Alibaba for the DLCs, so that you can have the higher sensitivity on the DLC and you can see how the DLC will move as the underlying stock price movements proceeds as well. Okay. So always look out for the rate star indicator if you are in doubt as to which DLC to choose for your target exposure. All right. I think that's a bit of how to select the right DLC. Again, if you couldn't catch what I say, advise you guys again to look out for our videos. We do have a wide range of videos over here, including how to select the right DLC for your target exposure, which will reiterate whatever that I've just highlighted, so that you can choose the right DLC for your target exposure. All right. Okay, under our education tab as well, you can find a lot more about the compounding effect and other features of the DLCs which you can look into, including the cost and fees, to understand more a bit about the DLCs before you actually go and trade the DLCs. All right. So you can't trade the DLCs on our StockGen DLC website. Here is for you to find out as much information as you can about the DLCs, including the full list of DLCs. It's which one to choose. Look at the stock code, a rate star indicator, as well as see the price. What are our bid and offer codes on the DLC at the current moment. All right. And then to be able to go to your website, to your trading platform, to go to Tiger Brokers platform to go and look out for this stock code CYJW. And then you can transact, buy and sell the DLCs on your Tiger Brokers platform. All right. So I just want to go back a bit as to, if you select the right DLC, select your DLC already, looking at CYJW, for example, you can find a lot of information about the DLCs here. You can find what is StockGen's bid and offer codes on the DLC over here, as well as the last intrinsic code which I mentioned just now, and also the underlying stock price movement. And you can find as well the price matrix where you can see for what given movement on the underlying stock or underlying index will the DLC price be over here intraday. All right. And also the compounding effect, which you can see, you can see over a period of time, actually how has the performance of the DLC been over a period of time. All right. So many tools for you to choose from to use as well to understand how the DLCs work, and you can see all the terms as well for the DLC. All right. So you can see the product list You can find out more about the DLCs, the product features, the risks, the cost and fees, etc. under our education tab. There's FAQ as well. And lastly, just in the last 5 minutes, I wanted to just highlight to you guys that you can look at the market set for more insight as to which is the top 10 DLCs by value traded, by gains or losers, as well as the top 10 underlyings as well, by gains, losers, as well as turnover change as well. All right. So quite a lot of resources for you to see under our market step, insights in the market, and hopefully trading ideas. And to learn more about what are the other Hong Kong stocks that are listed on Hong Kong market, besides your Tencent, Alibaba, Meituan, there are quite a lot of other Hong Kong stocks available as well. So do use these tabs under markets for trading insights, for ideas as well. Hopefully that will generate some ideas for you guys. All right. So I think the most important thing about our website, of course, is our hotline. So on the top right hand corner of our website, there's a DLC hotline number 62262828. So that's where you can reach out to my team and I. If you have any questions about DLCs, any questions that you have, any feedback that you have on the DLCs, feel free to call this hotline, or you can even drop us a message under the contact us box to understand more about the DLCs or to provide your feedback so that you can improve on the DLCs. So that is the most important thing about our website. Give us a call. If you have any questions, any feedback, or we'll be happy to answer your questions during the SGX trading hours. My team and I will be on standby to answer any calls, any questions that you have on the DLCs. All right. So that's all I have for the DLCs. I hope that I've went through a lot of content. But I hope that this will be able to provide you with a bit more insights on the DLCs, what we have, what to offer, and also the resources that you need to be able to get started on your DLC trading journey. All right. I think there is a Q&A, a survey that we have for you guys, for the viewers out there. All right. So you can't use there's a chat box under the comments box. You can see there's a survey link for you to fill up. I think that will give us a bit more insights into what are your thoughts and your feedback. So do fill up the survey under the comments box and take your time to give us your response. And I think we definitely appreciate your feedback. And so look out for the link on the comments box. All right. If not, I think thank you for your time for watching this video. We do hope that you learn a bit more about the DLCs and that you're able to try your hand at the DLCs, and you can find them on the Tiger Brokers website. If you have any feedback at all, as well, you can provide it to Tiger, as well as you can provide it to SocGen on our website. The contact information is there. We'll be very happy to hear what your thoughts on the DLCs, and if you face any difficulties or any challenges trading the DLCs, please reach out to us. All right. So that's thank you everyone for joining this webinar, and hope to again to chat with you guys and discuss more about the DLC. All right. Thank you.